Okay, all you devils, how you doing out there? Here we are on Thursday the 16th. Kind of a shorter one today here with just a couple of things I wanted to draw your attention to something that I've shown to members before here. I figured we'd share it a little bit here on YouTube as well. And we'll look at two things here just to re-emphasize the fact that the asset doesn't matter. They all trade the same way. So before we get there, I know, bear with me, guys. I got to do this here. So we're 12 days left in our contest, right? So this here's a little package giveaway. The link is directly below the video. If you're not already a member, very easy to participate. Your email or your Twitter handle, and then the app will kind of guide you through the process. Simple tasks get you points. The more points, the higher your odds. You can think of it as like entry tickets. So tweets, retweets, if you subscribe to our YouTube channel, follow any of my senseis on Twitter. They're very active. Sensei Hove, Sensei Tutum. If you follow us on Twitter, you've probably seen some of their stuff. But the easiest way to get points, and the one that gets you the largest amount of points, is to come over to our website. It's tradedevils.com. Link is directly below the site. It's directly below the link to the membership entry. And so here are our three plans for you. Free is, of course, always an option for people that want to just get a feel for the community. You can join for free. That'll get you access to all of the crypto deep dives, so things that we don't always share here on YouTube. But it'll get you bonus points into the entry, right? You come in, and again, as I've mentioned before, it's not a Discord straight link. It'll bring you to our website, and then you'll see the process. It takes all of 30 seconds. You'll land in the Discord, and we'll greet you there. So that's the easiest way to get points. And then again, likes, tweets, retweets, subscribe to YouTube, those kind of things. And again, the app shows you how to get extra points. It's super easy. Some nice little bundle of packages here. So I think that covers everything. Okay, with that said, now let me get here to what I wanted to show with you today. Let's do it over here. So this is this is a different way to look at the FX markets. And what you'll notice here, so this is on a daily chart. What this is, the asset I'm using doesn't matter, right? I just want you to see this. It's just a different way. Many of you have seen this before. It's a different way to look at how the currencies are trading in relation to one another. And what you want to notice here is that we have a reversion to the mean process that happens here. So let's use here. So this is. That's the New Zealand dollar here. So let me get my little tool. So you can see here. So this is particularly when we get to minus 50. So we work our way. So let's look at the yen and the New Zealand. So here's the New Zealand. Now here we where is it? Oh, looks like we cross right here. But look, the New Zealand is working its way up to plus 50, while the yen is working its way the opposite direction. All right, if I can get that. Play with me. Now we don't get as far in the yen, but then yet again we get to these extremes. Do you see it here? So we've got now the New Zealand is at an extreme relative to the yen and the dollar. Now, so here, dollar's a good example. So here's the dollar, right, going straight up. Then we come down, and then we're back up. But the one that was so striking, and I'm going to show you this. This was we didn't release this on YouTube. This was just to members. Was the distance between the Swiss and the Aussie. Now look at that extreme here. Now this is a daily chart. So here's 50, which is usually about as far as they go. You see, we get up there, then again, there will be a reversion to the mean. Here's the zero line. Well, the the absolute extreme here was for the Swiss up here to the Aussie down here, right? That's an extreme that you want to pay attention to that, because note here, they don't stay there, right? It's always swinging back and forth. So when you see something that is that far apart, that's screaming at you, heads up. So here's from the video. This was on March 19th. This was to members only. So here's the Swiss, here's the Aussie, and I'm saying, hey guys, heads up there, heads up, right? That's something to pay attention to when we get that far apart. So here's what. So let me go back here. So now note, since we've done that. So here's where we were on March 19th when we recorded that video. So here's the Swiss coming straight down. Now it's below zero, and here's the Aussie, right, coming straight. Now here, where do they cross? At zero. It's probably hard to see that. Here they cross right here, just beyond zero. Here's the Aussie crossing the Swiss from that absolute extreme. right? There's the, again, members, we're all alerted to that, right? As to whether or not they participated. Well, depends. We've got a pretty active FX community, but that extreme you got to pay attention to. So here's what I'm trying to show you. So here's what's happened since that extreme. This is the extreme on the 17th. We were looking at it, I think, on the 19th, saying, hey. Now, granted, right, this is an extreme, right? So it's just a free fall. Here's the daily here. So it's just a free fall. But from the extreme, which is what we're trying to pay attention to. Let's see if I had, all right, if we had something here. Well, so here between the 50 and the 618, we get well through that. At least I think there was one that one broke, so you had to work with this one. So we get right into that kill zone right here. This is where we want to participate. Down it goes. But from the extreme, all right? So let's say, well, okay, that's a daily. Well, how am I going to trade that? Well, you got to get down to something more manageable, like the hourly. So here's the extreme. Now, so you might look at that and say, well, would the indicators be of any help? Well, look, we're absolutely pinned, the RSI. I think that's the lowest that you're going to see here. Here's the Elliott oscillator, of course, is pinned, and the OBV pinned, right? Sellers clearly in control until we get the snapback. Now let's look at the snapback and see how you might have been able to participate in that. So first thing to note is how far it's gone since that extreme. So from the low to the high, 872 pips from the low, right? Not a bad little reversion to the mean. Get that thing sticky. So you say, okay, well, okay, that's an extreme, but I'd be buying the falling knife. How do I? Well, I'm not suggesting you buy the falling knife. What I'm suggesting is if you want to be alerted to this. So if it creates an opportunity for you to trade it, you got to be paying attention to it. So here's the swing, and it's hard to see, but down on a 15, there's a 1, 2, 3, 4, 5 into that. So you get a 5 up, down. Now here's the slight, and this is very common. This is a slight front run on the 50. So you can see what they do. They front run it here. Now it doesn't get there. It comes back. You might have been a little nervous here, but you're stopped below the 50. You're just fine. There's the front run on the target. All right. So you look at that and you go, okay. All right. What do we get on that one? Well, there's 345 pips off of this front run entry right here. So like, okay. What is there anything else I might do there? Well, of course you'd want to play with this one as well. What do we do? Golden zone. Swing low, swing high, right? The alternation here, the algo doesn't care. All the algo is seeing is a swing high to a swing low. There's golden zone. Right? I mean, again, it doesn't matter. Asset doesn't matter. I've shown this thousands of times in every asset class. Golden zone, right here. No, reaction from the golden zone. Boom. Well, now here we're to and through third target, and there's probably some geometry here, so you got things to trade off of. Looks like maybe a modified shift would have caught that. Okay, so like that, right? So tags it, reaction back to golden zone, guys. Again, and now this or with a drift like this looks to me more like something I'd put a regression channel on. So this is all come and gone. So now just working off of this. Well, if this is going to retrace again. All right, what would we be doing here? Let's get this one off. So I'd watch both of them. Well, I'd watch the lower of the two. Now I don't have I usually have 38 here just to make these. So here's the 23 and the 38. Just watching this. So this becomes obviously some structure you'd want to pay attention to for any sort of retrace here. Same with these. And you could do it this way just to get both of them in. Something along those lines. So anything that comes down here that looks corrective, and it looks like you already got an A going in. So it made that. Well, shit. That could be the first 5, the 1 of the A before you're going to get back down to this level. But then you'd think, excuse me, guys. I'm so sorry. Then you'd think, okay, wait a minute. What just happened here? So now potentially, if you see this now, so this would be the Aussie going all the way back up, right? So it was way down here, now going all the way back up as the Swiss goes the opposite direction. But looking here, as you look at our bundle of our 8 major currencies, nobody has any real advantage here. We're not at any extremes. So there's no, with regards to this particular approach to how to view the markets, nobody really has an advantage here. Everybody is kind of at home base. You want to watch for these extremes. And if you can catch them on the daily, that's a huge heads up. right, as we've just went through, right, 800 pips. So something to pay attention to at the very least, right? So, you know, I know we had a few members participate in that got rewarded very handsomely for just watching that kind of extreme. Oh, let's see, what else do I have? It's 10 minutes. Yeah, let's see here. Let's go back over here. Oh yeah, I wanted to show you this, guys. Okay, just kind of again reinforcing the point, right? If you've got issues with Elliott Wave, right, whatever, right, some people do. This section is pretty remarkable here. Right, so you can say, oh, maybe the Elliott, maybe not. I don't know. Let's just take a look here. So, well, let me back up here. Let me go to an hourly. So sorry, damn it. Just the allergies kill me. So well, we'll do all of them. So from the top here. So, well, of course you're going to check that, right? See what we do here. We don't quite make the golden zone, so likely a front run, but we're not yet to target, right? Target is way down here, but that's the last one that just played. But there's an impulse in there, right? So we can see from here we get a nice diagonal 1, 2, 3, 4, 5. So I get that impulse. Now this could be that all we're doing here is that this is some sort of corrective action here. Of course, we would be paying attention to the low down here, right? That would invalidate any thinking that this is correcting this. This is a bit of a chop fest in there. But when you go down to the smaller time frames, it's very, very tradable. Let's go to the 15-minute where I think it's really dramatic, and you guys can kind of see this. So let's zoom it in. All right. So as I've shown it, I don't know, 3,000-4,000 times in crypto, same amount in equities, same amount in indexes. We do this all day in the day trading room because it's all you really need, right? So let's go here to here. All right, there's 50 to the tick, right? So guys, same thing. Some of you are already going, oh shit, it's this again, right? That's the point. Yeah, this again, right? There, 50 to the tick. One, boom, boom, the second target. Barely even pauses here at first target, right? Second. Now we get a little trend reversal, but that's not the only one in there because I'm sure there's others in here. So here's this one. There's 50 to the tick. There's first, second, third. You know, and I'm just eyeballing here. What else we got? All right, looks like so here's one. Well, this is a break on the other side, so that's actually good to see. So here now that tells you in this particular push. So you look there and you go, why is that? Why doesn't it hold there? Right, that's why. So remember, it's a battle, always a battle on both sides between algos. So who wins the day here? This guy wins it, right to the golden zone. Do you see it? It just tags the golden zone, gets his target. So he blows through the sell side resistance that's here. So this guy loses, this guy wins it. Now, even from here, now you look at it and you go, maybe they're pulling from there. Do you see why? All right, so this guy gets it. This guy gets it. I shouldn't personalize it. This piece of code gets to its target here just as it's working the 50 from the target from the top, but no legs, right? So now up again. Still, we're not broken through on this side, so down we go. But you know there's more of them in there on the buy side. So let's pull this off and just making the point here that you can trade these all day long because they're happening on every time frame in every asset class every day that the markets are trading. It never ends. They never turn it off. Okay, so looking here. So, okay. Well, let's try the lower one first. All right, so there's swing low, 50 to the tick. It looks like this one, that's close enough, right? So here, 50 to the tick, we get that target, but I'll bet there's an internal one in there as well, right? So there's this one, right? Golden zone, second target. You see the cluster up here? Second target, first target. Boom, up it goes, right? So you understand, okay, what's happening? Oh, then look at this. I wonder what's there. You get to the point where you don't even have to, you know what's there, right? Do I even have to draw it? You know what I'm going to say. You know what I'm going to show you. I don't even have to draw it. All right, let's get it right on that pivot. All right, you want to be right on them. Okay, so here we go. Swing down. Screams back up. What do? We tag the 618. Target, right? You go, oh, looks like there's another. Do I even need to draw it? Do I even need to draw it? All right. So I get right on that. Okay, so with this one not tick level, but we get right in the kill zone. So you get another one. Right? It's just one. It's on the way up, boom, boom, boom. On the way down, if one breaks, it's because the other guy, the other side is winning the day. Right? So that's 1, 2, 3, 4, 5 on the way up. 1, 2, 1, 2, 2 on the way down, plus the big one up here that hasn't broken. Just one after the next. Again, doesn't matter. I don't care what chart you put in front of me; they're going to be there. Just the other day, not a lot of people watch it because not a lot of people trade it, but it was the 3-day copper chart. 3-day chart, same thing, right? Doesn't matter, guys. Over and over and over and over again. What matters is that you do it the same way. This is the point of the redundancy. Some people subscribe to my YouTube channel and go, oh, fuck, not this guy again, not with the same shit. Yes, exactly. That's the whole point. Same thing every time. That's the only advantage you get. Same thing, same way every time. If you want to be profitable over time, sooner or later you got to make peace with that. Now, you don't have to choose my methodology. I'd like to think that if this were a jury case, we're beyond a reasonable doubt here as to whether or not this algorithm is active in every asset, in every market, in every time frame. I've shown it at least 5,000 times now, at least. Probably more than that, because just here, there's 4, 5, 6, 7 of them, and just figure there's probably 6 to 7 of them in every video I've ever done. I'm over 1,000 videos. Do the math, right? So it's really, you make the case it's all you need. But of course, we don't know who's going to win. That's where the Elliott wave and the geometry and the oscillators and all of that comes in to help you try and identify who's more likely to win. So for example here, this impulse up makes you think, well, okay, so who's going to win next? Well, let's get this on the low. So here's an example where this is why I factor in the Elliott. And again, you guys, I'm not a purist. I'm not an Elliott purist. I'm looking for 5s and 3s. Yeah, do I know the Elliott? Yeah, I do, but I don't enforce it like a purist would, right? Because it's third on my list of priorities. I just had a dialogue with a member who was showing me the Amazon chart, going, "What the hell is the count here?" And I go, "You tell you the truth, I have no idea, but I don't really care because I don't need it to trade it. Show me what's happening with the fibs. Is there any geometry I can play off of? Are the oscillators helping? Right? If the Elliott's not there." You don't need the Elliott count, but what a great example where it helps. So you're looking, well, you'd be looking at this going, oh, okay, well, clearly I got an impulse. So after the impulse, what am I thinking is likely to happen next? Well, I'm looking for an A, B, and a C. So if this sets up here and I go, oh, okay, well, I know a B wave anywhere from the 50 to the 786, I come up and I hit the 50 to the tick. Hey, heads up. Because it sure looks like that's 5 down, 1, 2, 3 up. So I've got just a textbook, right? Again, I mean, is that a little Elliott? Yeah, there's a little Elliott in there. Would I have needed the Elliott? I got to swing high, I got to swing low. That's the dominant swings in this section. And by the way, that's about a month apart. Right? It's a long wait for that. Oh, pardon me. No, excuse me, I'm on a 15-minute, I'm so used to being on a long term. That's 2 days apart on a 15-minute chart. So you didn't have to wait that long for that to set up, did you? Right, so, you're thinking, oh shit, it's not gonna happen. Right, don't forget, right, there's always another one in there, right? So you got a nice little cluster here to say, okay, I'll take some profit. So if you didn't take full profit here, you let one run, well now you got the lower one here too. ABC. What am I thinking after the ABC? Well, maybe this is going to end up being more. Well, look, get that right on there. What do we do here? Right, golden zone. Right. It's just this is the DNA of the market, guys. This is how it moves. You have to know this. You have to know where that is, or I promise you'll be thinking, oh, it's going to go, and you'll buy right into that. How do I know that? Because I've been that guy who did before this was taught to me. By the way, this was taught to me, just as I try and teach it to you. I didn't discover this. It was taught to me slightly differently, but now I've adapted this. This was my own addition to it right now, which is kind of cool, right? No one was doing the 65 before I started teaching that. Now people that don't follow me don't know. I don't know. It's become part of part of the trading vernacular, right? So the golden zone, the 618.65, right? That's a Trade Devil's original. Okay, so but David Halsey is the first one who was identified the 23.6, and I've been through on our website. You can go through how it was taught to me slightly differently, but you see the 23.6 so many times, right? Halsey absolutely nailed that. So I always want to give him credit because the credit is due there. The way it was taught to me is slightly differently, just very, very subtle difference. It was the 100 from here, so you'd take that swing. It was 100, then back down. It was the 1272, which is within like 3 or 4 ticks of the 23.6. Very different, very subtle variation of it. But the 23.6 is so spot on. I use it as well. But if it gets past, if you see it going past the 23 like this, often it's going up into that. Oh shit, I know that's hard to see. Often that's, here, let's just get everything off. Often what's happening there, if you see, if it does this, if it gets a little past the 23, and you see this kind of thing will come here and we'll go a little past, usually what's happening there, right, is that this is what happened. Right? Do you see how close that is to the 272? That's how it was taught to me, right? That it would be that band between the 272 and the 38. And you often see that hit just right. But Halsey, his adaptation was just taking the fibs. So here's 23, 38, 50. He just took it up the other direction and noticed that the 23 was hitting, so it had to be software because it was hitting with such precision. But look how close, right? It's within ticks. Right, but I want to give him credit for that because that was his contribution. I'd like to think the 65 was my contribution. All right, so we're all here trying to help you guys. He's a great educator and a name you should be aware of if you're still in the learning phase of your career. All right, guys, there you go. So there's a little bonus content for you. That's members have seen that many times, and that's part of our training, but. I don't know, just in a good mood today to share with you. So a couple of things. So one, that oscillator or that indicator to alert you, right? If you're trading FX, you got to pay attention to that, which is, right, what's down here? Well, now, very different scenario. Remember, you can trade this, you can follow this on every time frame. Look here on a 15-minute, here's the extreme from the dollar to the Aussie. Right, so here's the dollar working its way down, but we don't get, here's the last extreme. It's not as tradable on a 15-minute, sure, but I tend to really defer to a 60-minute and above for this. But if you're a day trader, you certainly wouldn't hurt to look here to see who's moving what direction for the day. All right, guys, there you go. Don't forget our little contest here. I'm just giving you teasing out a few nuggets, but you go through the belt course. Oh, it's nugget rich. All right, guys, have a good one.